And today we're going to have our weekly strategy roundtable discussion, where we talk about current market pullback in AI-related names. We have a bifurcation of the equity markets, where some sectors that are not AI-related are close to all-time high, and some of the sectors that are AI-related are into, have 30, 40, 50% pullback. So we're going to talk about that, where are the opportunities in the market, and how to hedge your portfolio. Alex, type in inside of the questions if you can hear me. Excellent. I want to make sure that the audio is working, and I can hear you now. Okay, perfect. Great. For those of you who are new, we have a lot of new names, which is great. I appreciate the attendance. For those of you who are new, my background is technology. I have a master's degree in computer science with emphasis. My master's degree, my thesis was in artificial intelligence. So I've been doing that for a very long time, for more than 25 years since I got my master's degree. I worked as the CTO and executive in several fintech startups here in Chicago, Options Express online broker-dealer, Pick6, hedge funds. So several hedge funds, several broker-dealers building platforms for either retail or institutional traders. Options Express went public, I think right around 2006, 2007. And since then, I decided to manage my own money using the technology, using the AI models that I learned to develop, and build an engineering team that continue to make progress and build new models using latest advances in artificial intelligence, and also managing my own money. Started Tradespoon, started Yellow Tunnel over 12 years ago. Both companies have been in existence. About 2 years ago, Keith Harwood, whose background is in math and market making. So he was a trader on the floor, specializing in options and futures. So he has a strong knowledge and understanding of markets. And between two of us, we bring a lot of experience managing portfolio, building models. And that's our background. Disclosures are very important. I'm going to go through specific trade ideas. So it's very important to look at the disclosures. Trading stock and options involve risk and not suitable for everyone. You must be aware of the risks and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm here to show you what I do in my own account based on my own risk tolerance level for general education and information purposes only. All right, trading psychology is important. We're gonna get back to that, but let's talk about current market conditions. So if I look at the daily chart, right? If I look at the daily chart, most important, again, I do top to bottom approach. If you look at the 10-year yield, we have a sharp pullback, kind of the usual market before the 2022. Before the 2022, when interest rates were low, usually people invest in both equity and bond market, right? And if there's a pullback in equity, people gravitate toward bond market, treasuries. Ever since 22, when rising inflation and Fed decided to raise interest rates, that correlation has been broken. But at least for now, we've seen this period in the past 3-4 years. We've seen the periods where they are inversely correlated, right? So people, when people sell technology, they buy bonds, right? They buy TLT. You can see a sharp rally in treasury market. Dollar is stable, no new signal, but it did break the September lows, so it's continue to make new lows, trading away from United States because of the uncertainty in the policies and administration or other reasons, right? But you definitely see a weaker dollar, which is benefiting the emerging market, right? If you look at the emerging market, it's close to, it's almost at all-time high. If you look at Japan or Germany, right, they're also close to all-time high. So that trade continues to work. Silver, very violent moves in silver, right? In the past, since August, it went from 35 to 120, almost, triple, quadruple in just a few months, which shows that it's in overbought territory, right? since a lot of retail investors are buying options and there's not a lot of liquidity in some of these ETFs, so you have sharp pullback in silver, and it's also sitting at the key support, right? Around 65, 60 level. So trading below 50 and 100-day moving average. Right? So metals and miners across the board, not just silver. You can see a pullback. XME is at 50-day moving average. And Bitcoin, right? Bitcoin touched 60, right, from 125,000. So 50% retracement in Bitcoin. There's not a lot of support below 60,000, right? It's kind of a 50% retracement. So that's important level in the Bitcoin. And then what else? And software, right? I don't know where my software went. But most of the sell-off, at least started back in August, September, is in tech software-related companies. It was the idea that AI is going to make it easier to compete with large tech companies and squeeze their margins. They won't be able to charge as much as they want. So we do have about 32% retracement, right? 32% pullback. So in bear market territory, right? Stocks like Microsoft, you can see about 30% pullback, which is considered to be bear market territory, or Volatility, right? AI-related stocks, very similar price action. And it's actually translated into outside of the technology company like Morgan Stanley or Schwab, right? They have been overbought, and again concerned that AI is going to bring new fintech companies, which will compete with Schwab's and Morgan Stanley's of the world. And Schwab is down 14% below 200-day moving average. So you can see kind of a rotation, just not only in the tech-related companies, but also outside of tech. And in general, you can see being XLF, financial sector, has been under pressure. We have about, from the highs to lows, about 10% pullback, 10% pullback in XLF sector. So what do you expect next? If you look at our models, if you look at the aggressive power trader model, this model updates every single day. Right, at 8 p.m., 8:30, we post the model results. You can see, first of all, signals. You can see consumer staples, McDonald's of the world, telecommunication like AT&T, they're continuing to grind higher. Some sectors like industrials are also continuing to grind higher. You can see XLF is actually positive for today, and the XLI industrials banks also rebounding. And XLI is not that far from all-time highs, and the value stocks, right? I forgot about value, or equal weighted S&P, right? We do have more and more stocks trading above 50-day moving average outside of AI theme, whether it's consumer staples or utilities or some of the banks, some of the industrials. They are trading in a strong momentum, not that far away from all-time highs. So that's the equal weighted S&P. So spiders, basically in the next 10 days, model sees the market is getting too oversold, right? For the 10-day prediction, 6 days, 1 month's prediction, it sees 673. And then in the next 2 to 3 months, revisit of all-time highs and even break into new all-time highs, potentially in the next 3 to 6 months, right? So if you look at the spiders, 675 is a very important level. It corresponds to a 100-day moving average, 2 standard deviation move. It's very close to December lows, right, and October highs. So and peak to trough is about, let's look at spiders. I think I follow spider, SPX closer, but it's 50% retracement, right? If I looked at the all-time high on SPY or SPX versus October and November lows, we touched today actually at 50% retracement, 67.80 67.80 was the today's low, right? We know that in terms of positioning, you do have a lot of positioning at 6,800. We do have options expiration starting tomorrow. VIX expires, VIX futures volatility contracts will expire tomorrow, and then Friday we have equity expiration. And that a lot of contracts will be expired, and then dealers will have to reestablish their positions, right? And that's where you could see elevated volatility, either to the downside if there's a negative catalyst, or to the upside if there's a positive catalyst, right? You can argue that market is oversold, 100-day moving average to standard deviation. This level will hold, right? And then you have a bounce back starting, by end of this week or early next week, right? That's scenario number one. And then scenario number two, this level doesn't hold, 50% retracement doesn't hold, December lows doesn't hold, and then we revisit the 200-day moving average and October, November lows, right? Scenario number two. Right. So both scenarios are possible. I would not assume that one will, 100% certainty that one is going to happen or two. I would be prepared for both outcomes, right? At this point, since we have failed on Friday, right, into the long weekend, and today we will see it's not the end of the day, right? We've been fluctuating between probably in the middle of the range right now, right? So, if today we can stay above 6,800 and Friday we pull back, then, the longer we stay below the year-to-date lows, the more likely we can hit 6,500. So those are the two possible outcomes. So let's go through the scenarios. How many of you say, scenario number one is going to happen, right? Between now and we're already February, so March expiration, right? So going into March, April is scenario number one. How many of you say is going to be scenario number one? We're going to revisit all-time highs, right? Or scenario number two, we're going to revisit the lows. Two, Alex, two. All right, Martin, two. All right, Bernard, G8, Greg, John, Ken, multiple Ken, Louis, Martin, Michael, Gwen, Terry, Chuck, Wanda, two. All right, so most of you say two. I would put 60%. My vote is I have 60% confidence. It's going to be 7,000, 40%, 6,500. So I don't have a strong opinion. My bias is to the upside because I feel the technology is way oversold, right? Where Bitcoin is not making new lows, software is not making new lows, and we maybe retest these lows. So most likely the scenario is something like this. This is my core scenario, right? My core scenario would be, VIX is still not in extremes, right? We're 22, 24 in VIX. So I think we do pull back, probably maybe not reach 6,500, but pull back and then rebound toward the end of the quarter. But I would not be surprised if we have scenario two, right, for that we do revisit October, November lows. I think it will depend on the news. Not sure what the positive catalyst is. I'm not sure what the negative catalyst is. I am concerned that the market doesn't rally on better than expected inflation or employment data. So then I'm, next catalyst is expiration. So this week, early next week, I think we'll know whether we're approaching 7,000 or we're gonna retest 6,500. So I think it's important to have cash, right? If you look at our models suggestion, only have 4 positions at a time, and maximum loss of 2.5% of account value per position. Right? You can use our aggressive power trader to find, what the model basically sees. I agree with the model. Long-term trends are still intact. I think it's possible to revisit all-time highs in the next month or two. So I think that's possible. For now, there is no momentum below 670, right? But it could change very quickly. So aggressive power trader shows you stocks that are in option. It gets updated every day. You can look at the weekly power trader, right? This model gets updated only on Sunday, and you get list of stocks that potentially can outperform the market, right? You can see Caterpillar, right? So some of the industrials continue to grind higher and almost at all-time high, right? So Caterpillar is in strong momentum. Some of the utilities company like Dominion Energy is in strong uptrend, but you can see kind of a reversal today, right? This would be a bear argument that most people are piling into healthcare, right? So Johnson & Johnson was another signal, right? Still at all-time high, right? Or utilities like Dominion Energy, right? Or McDonald's, right? Consumer utilities or consumer kind of staples, right? McDonald's of the world, Walmart was a signal recently, but you can see that the argument could be that these stocks are overbought, right? That the safety asset classes are overbought, and the technology hasn't been oversold, right? VIX is at 20, we were at 23, but still we didn't even get to 28, 30 level, right? Not, let alone October levels. Right? October was kind of exogenous shock, so that's you can understand why it's 60. But right now, even we didn't even hit the October-November's highs. So market is not oversold. Consumer staples are rolling over. You know, that could be an issue as well, right? So it makes sense to potentially hedge. So weekly power traders give you signals where you can look for opportunities in the market if you see them oversold. T-Mobile, you know, is one of the trades today. And then dynamic power trader is where you can actually look at some of my positions, right? So we have T-Mobile, I'm in T-Mobile, USB. I mean, despite market pullback today, stocks like T-Mobile, USB, regional banks are actually higher, right? I mean, session low, but they're higher. You have some of the industrials like Carrier, also up today, you know, T-Mobile. So you can see it's definitely the rotation trade. It's not indiscriminate sell-off across all the asset classes, but you do have a pullback in metals and miners, consumer staples, strong pullback. Industrials are still positive, banks are still positive. That would be a bullish argument. Home builders are pulling back, materials are pulling back. The REITs are still positive, and biotech is positive, right? So kind of a rotation. If you want to see my trades, then you can go into orders, you can go into positions. You can see I bought T-Mobile, I bought USB. So it's a combination of stock and option trades, right? I have option trades and I have stock trades, which you can trade. Any questions? You can enter your phone and get SMS message if you want to follow me with SMS message. You see history every week, the portfolio changes, and recording, live trading room recordings where Keith and I explain every day what we trade, right? You can find them here. And also, if you want to analyze your own stock, like NVIDIA is announcing earnings next week, you want to see what the trends in NVIDIA, and model will show you it sees 188 next 10 days, but it see a breakout above 200, right? It's still bullish on the market that in the next couple months, we will make new highs, right? Year end, we're still gonna have a positive year. So that's dynamic power trader. You have earnings power trader where I trade options. We have DoorDash, Alibaba announcing earnings, Walmart announcing earnings. And finally, Profit Accelerator. Profit Accelerator is where I trade stocks, same idea. You can see all of the stock positions that I have. My orders, positions, you know, if you're interested in options and you wanna leverage your portfolio, you can execute the same trades using options. Any questions on the tools? Any questions about the market? Difficult to cover these students. I agree, Alex. Yeah, I mean, I'm slightly bullish bias, but again, there's a lot of areas of concern. And my biggest concern is that, well, you know, if we can't rally on positive data, how are we going to rally if there is no news or negative news? But the idea is that trade what you see, not what you think, right? QQQ today, I mean, basically retested November, October lows, right? We were at 590 after the Amazon earnings. Today, the low 593, right? We retested Friday's, Thursday low of, you know, not last week, but 2 weeks ago. And we're at 200-day moving average. So right now, there's, I think, little room to the downside, right? More room to the upside if, you know, technology does not sell off, right? We have to sell off in home builders and materials, but technology is actually going to turn positive by the end of the day. Then the argument that the market is oversold and we could rally, right? So trade what you see right now. I see market is oversold. We're at 200-day moving average. I think, you know, some of these pullbacks are exhaustive, right? Whether it's Bitcoin or software or Microsoft. If we don't hold this level, if we trade below 580, right? If we drop below 580 and people are gravitating toward bonds and, you know, 10-year yield drops below 4%, I would keep an eye on yield, right? We touched 4% today, kind of stabilize it. But if we drop below 390 on the yield and we take out QQQ lows, October, November lows, then the sell-off could reaccelerate, right? That's where you can hit that panic button and people gonna start selling off. It's either negative news or during expiration, right? During expiration. In terms of news, I don't see a lot of anything that can, you know, potentially move the market, right? We have Fed speakers, we have FOMC meeting minutes, but it's not, you know, GDP data. I don't think core PCE data, I don't think it's anything that can move the needle, but the reaction to this news and expiration, that could trigger more volatility in the market. That I do agree. Any questions? Chuck, yeah, if you're looking for larger portfolio, I know you like to sell, you know, cash secured puts, right? You're looking for income. I would start with dynamic power trader. I would start with dynamic power trader. We actually have a promotion that we just sent out, which you should be getting. So I would start with dynamic power trader because you can see what I'm trading. And like, let's say CAR, right? I'm long CAR. I mean, you can sell put spread or cash secure puts, not the most liquid name, but still you can say, okay, it's breaking out. It's still far away from all-time highs. It's above all the main moving average. You know, maybe there's a continuation, carrier global. So you sell put or put spread if you want to own 100 shares of stock, but you have to have a larger portfolio. So I would start with the dynamic power trader. Thank you, Chuck, Wanda. Closing and opening bell. Martin, I think I give you the link to the opening bell is here. And the link to the closing bell I already, you should have it, it hasn't changed. So you should be there, you should be able to find it. $5,200, Alex, yeah. I mean, I do look at percentage of stocks above 50-day moving average. I mean, it's stable, right? It's kind of at February lows. Obviously, there's a lot more room to the downside, right? November, we were at 30%. So that's the argument that there is broadening of the participation, right? Percentage of stocks above 20-day moving average. I mean, it did pull back, obviously, was the sell-off, but it's still pretty stable, right? And that could be a bearish or bullish argument, right? Bears will say, well, there is still a lot more room to the downside because most of the stocks are still, you know, half of the stocks are above 20-day moving average. right? But the bulls will argue that yes, you have sell-off in the AI names, it's overdone, and it should bounce back. And you can see it in VIX, right? Tug of war in VIX between 23 today and 20. And value stocks are almost flat. Spider is actually turning positive. Semi is turning positive. Small cap. So it's a tug of war between bulls and bears, right? There's no definitive answer. So the answer is trade what you see, not what you think. And right now, you just need to see who's going to win this tug of war. And I think with this week expiration, if I have to guess, by Monday or Tuesday of next week, you should have the answer to that question. So please register. It's the same link. So if you attend today's webinar, next Tuesday, same time, same webinar, right? We're going to have expiration date, and we'll see if we approach in 7,000 or we approach into the downside. If you do want to, in a live trading room, in a trade spoon, we didn't do it in Yellow Tunnel, but I did trade QQQ. So I'll put the QQQ trade here. Right? I closed it, actually. I closed it on Friday because I think market is oversold. But if you're concerned about your portfolio, if QQQ is down 10% and you're down more than 10%, you can either raise cash by selling some of your long positions, or you can buy a QQQ hedge. So I've been trading 600, 580 put multiple times. So maybe wait till the end of the day, and if you're already down 10%, then and market sells off, then I would say you probably want to consider trimming your long positions, or buy QQQ put spread, or if you're not comfortable with options, you can buy PSQ, right? Inverse related ETF, PSQ. All right, guys, that's all I have for today. Thank you very much. I will see you Tuesday next. Please schedule consultation with Keith if you need help with how to hedge your portfolio or how to build your portfolio, how to use our services. I put a link here. Schedule a consultation with Keith. He can help you with your subscription, or if you're interested in subscription or you want to know what the best subscription is, then I would take it. That it's free, right? It's a 25-minute consultation, completely free. Keith has, graduate of University of Chicago, with MBA degree. He has a degree in math and been trading options as a professional trader for many years. So this is an opportunity you don't want to miss. Trade what you see and not what you think. Yes, what you think. Usually it says trade what you see, not what you think. So whatever you think, right? You think it's going to go to 7,000. Continue watching the market, right? If it starts breaking down, it doesn't matter what you think. You want to trade what you see, not what you think. Martin, can I reminder? If you sign up for Earnings Power Trader, right now I kind of made an exception, but if you sign up for Earnings Power Trader, you will get a reminder with the link to the live trading, to the closing bell. So you need to sign up for Earnings Power Trader. With your subscription, usually we don't, only if you're in Earnings Power Trader, but then you would get the reminder. Otherwise, just ask me and I will always can place it here. Yeah, opening bell. All right, that's all I have for today. Thank you very much, guys. Not for closing bell. I don't have a link in front of me. Let me see. Let me put the link. Okay, Martin. So I'm going to put the link. I'll invite you, all of you guys, to the closing bell today. Keith will do it. So join for closing bell today if you have time. If not, schedule a meeting with Keith. And I will see you guys next Tuesday, same time. Thanks you very much for attending. We have a lot of people today, so I appreciate all the attendance.